Hi traders, this is Cynthia of Day Trade Forex, and in this video I'm going to show you how to use the new indicators that I've added to the Green Tomatoes Extra Advanced Alert System. There are three new indicators that give you pop-up alerts that are in addition to the Extra Advanced Alert System, where the indicators agree with the multi-time frame MACD in the bottom window. And to refresh your memory about the multi-time frame MACD indicator, the yellow line is the 4-hour trend and the orange line is the daily trend, and this is the purple baseline. And if both of these lines are above, then you have a very strong uptrend, and the more sensitive line is the yellow 4-hour line. So whenever you see it cross the purple line or even cross the 4-hour line, you're going to have a change in trend. You're going to have a major change in trend when both the daily and the 4-hour line are either above or below the baseline. But you can still trade with smaller positions when the yellow line crosses either the purple baseline or the orange line. So in this type of reversal trading that we're doing with the Pro system, you don't necessarily have to wait for both the 4-hour and the daily line to be either above or below the purple baseline. You can trade when the 4-hour faster line crosses above or below the purple baseline or even the orange daily line. So I hope that's about as clear as mud, because in the extra advanced and the advanced system I teach that trend is pretty flat when the purple baseline is in between. I'm looking at a US Tech 30-minute. You can see that the purple baseline is in between, and even though we've had a downtrend starting right about here, everything lined up for a sell trade, and then it pushed past the golden mean line, but now we're in consolidation. It's an hour and a half before the US stock market opens. I had placed a buy trade here just to show you what would happen if you placed a buy trade off the bottom of the support, and the red liquidity zone, the resistance area, is so close. There's no space in between, and this is the consolidation that you're seeing and the flatness that you're seeing down here. So price really, it could continue to push up or go down, but there was no real room between supply and demand. So I got in just as an experiment, and that's only like 7-8 pips to the overhead resistance red zone. So of course I had no business placing a buy trade at this point, but I just wanted to illustrate what could happen if you're placing a buy trade off the demand area. This is the demand area where there is demand for the price because the price is low and people expect it to go up. This is the supply area where it hits some sort of resistance and where the market makers have placed a rejection into the system so that they catch people who are going long and can stop them out when they very suddenly reverse the price. So anytime you see the blue zone with very little space in between the red zone, then you know that price is in consolidation and you really should not be placing either buy or sell positions. And in the US 500 it was the same thing. I placed a trade, a buy trade, on this spike, and then right after that I got the reversal pop-up arrow. So you can see there's really no room for movement at this point. Even though the trend line channels have been going up, there's no space between the demand blue zone or the red supply zone that the market makers have created to move price. And so we're just in a consolidation area. You can see the purple line is in between. So even though we had a sell, a good sell bouncing off the red supply zone, which is overhead resistance, this was a fine sell entry if I had been awake at that time, but this is exactly when I got in front of my computer. And I just wanted to show you this very bad trade that I made on purpose to show you that it's just has no potential to go anywhere when there's so little room for movement between the blue zone and the red zone. And even though the trend is up, this was purchased on a spike very close to the red zone. There's no room for it to go up. I would expect that when the US stock market opens in another hour and a half, that price is going to be rejected off of this stronger red zone. It'll push past this very weak support, and then you have your next support down here, but the main support is this big long blue zone down here. So this is where price really started the major run up, actually right about in here somewhere, and it's been going up for 2 days, 3 days. We're in the third day now. So price is going to get rejected, and I'll be closing this trade manually because I don't want it to hit my stop loss. I just wanted to show you an example of a bad trade. And this morning when I woke up, the pound was very, very weak. This is a weak blue 1.4. It's been as weak as 0.9. And the dollar is flat, neutral, but still stronger than the pound. And the yen is much stronger, and the New Zealand dollar is much stronger. So the pair that always has the most push or oomph behind it is the pound New Zealand dollar. And you can see down here how these three sell trades are doing. We can look at the pound US dollar, and I placed a vertical line where I did my sell, and it's right at support. It's in the double green lines, which the trend is sloped up, but the first major support is down here, and it's on the verge of breaking through the triangle breakout, and this would be the target down here. So if it pushes past this blue support, then I could manually drag my take profit down even further, except for that I know my trade manager is going to be managing it halfway between the take profit and where price is, where I entered. And it's just a little pullback trade, but there are times when your pullback trades don't go very far, and it has to do with the currency strength meter. So the currency strength meter yellow is just not strong enough compared to the weak pound. But if we take a look at the pound New Zealand dollar, this was my sell at the bottom of this long candle here, because that's when I woke up and had my coffee and was looking for something to trade. But now we have the early reversal arrow that has popped up, but if you look at the pound, it's a weak 1.4, but if that strengthens or the New Zealand weakens, which it looks like that's exactly what's happening, it's actually hit the bottom of the trend line. It's in this blue support area that goes all the way back to here. At this point, I would manually want to consider closing my trade and booking whatever little gain I might have. The RSI is very oversold, but it hasn't turned green, and it hasn't actually turned up to the 20% line. So I have to analyze all of this stuff if I think that I might want to close a trade early. Right now the pound New Zealand is $4 in profit, and if I look at the currency strength meter, it'll help me decide if I want to stay in the trade or not. So the pound is blue at 1.1, and the New Zealand dollar is, if it keeps strong and even sometimes goes into the red again, then at 7.0 it would turn red, or 7.1 or something. Whenever it turns red, I'll know that the strength and the weakness are the ratios that they really should be to stay in this trade. So actually, this is my only potential good trade. You can see my take profit with the trade manager is down here at the major support, but it needs to keep pushing below this minor support. So I don't know if it's going to happen or not, because here you can see the RSI has turned up and the divergence indicator has given me an up arrow. So that's telling me that there's some divergence now with the price going down, but the momentum in the RSI is flattened out. So it's kind of waffling at this point. So for me to decide to stay in this trade, I have to look at my currency strength meter. The pound is strengthening. Now it's not 1.1 anymore, it's 1.9. And the New Zealand dollar is, well, it's still fluctuating a little bit. So this is an indecision point, and because it's sitting right here where market makers are actually going to be buying at this point, and they're going to be catching people who are in a sell trade and hoping to get them stopped out. Well, I was in profit on this trade and now I'm not. So because price was sitting right on this blue oversold zone and in between the double trend line channels, I should have exited my trade before this early reversal arrow ever popped up. So there are times when price is already sitting on a red zone or a blue zone, and the idea is that yes, we like to do retracement trading, but not when price is sitting, for instance, like where I entered on every single one of my trades. I should not be selling at the bottom when price is sitting in a blue zone or the double green channel lines. I should be waiting for this early reversal arrow for the RSI to improve and go back up, and once it hits the 50% line and all of these indicators, the dots and the candles have turned green, then that would be my reversal entry buy order, and my first target would be the golden mean, and hopefully price would be strong enough to push from one extreme to another, so it would be pushing into the resistance area. Thank God I'm in a demo account showing you bad trades, because there was a point this morning when all of these were like $10-15 in profit. That would have been very encouraging, and for a newbie trader that would have been enough to keep them in the trade. But when you stay in a trade, when you're selling at the bottom or buying at the top, this is what can happen. There's just no guarantee that you're going to have price push in your desired direction when you're selling at the bottom or buying at the top. So this morning, in every case, well, for the pound pairs, I sold at the bottom of each of these areas between resistance and support. I sold at the bottom. So that's not the right thing to do, because you might get lucky with a few pips, but you're not going to get lucky with a huge trend, and we're in this business to catch the big trends. So don't sell at the bottom and don't buy at the top. There are times when we use the currency strength meter to do what's called fading the trend, and in this instance I was trading with the trend with the currency strength meter, but it's at the bottom of a long drop off and it's hit support, and it could go down as far as this next support here if the pound stays really weak and the New Zealand dollar stays really strong. There's no guarantee that it will do that, but it's possible. But that's where trading turns into gambling. So we don't want to gamble. We want to do trend trading, yes, of course, and retracement trading is watching for retracements and then jumping back in when the trend happens. But in this case, jumping back into the trend, which is down, even though these double trend line channel lines are slightly up, the trend actually has been down. You can see in your multi-time frame window that the yellow and the orange line are both below the zero baseline. But you can see everything's starting to change because we have the 4-hour that's more sensitive and it's starting to turn up, and the RSI is flat, and we have the early reversal arrow at the bottom of this double trend channel, and it's sitting on this minor blue support area. So this is an iffy trade. This is what I would call a gambler's trade. It's a late entry, and in real life, in my live account, I would have never taken this trade, which without this red resistance zones and the blue support zones, this would have been a likely retracement trade sell entry, which without these other indicators I would have taken. But you can see it's just probably not going to go that far. And so retracement trading is probably done best if price is retracing right around the golden mean line, because then you have some room for movement. For instance, in this case, if this all of this retracement had happened right around the golden mean line when I was in front of my computer and I got the pink dot, and I would have been able to sell, and my target using my crosshair would have been the blue zone. So I had some room for movement. Say I had sold on this rejection candle here, that's a pen bar candle, down to this zone here, it's approximately 70 pips. That's an okay potential trade. But where I got in at the bottom of this candle, what's my potential? At the very most, maybe 15 pips. Okay, well, maybe for some of you scalpers that's okay, but like I said, knowing that we're selling at support is a gambler's trade. It's not the kind of trade that has a potential. And now you can see that my pound pairs have become profitable again, and the reason is that the US dollar is strengthening while the pound is still pretty weak, and the pound is weak, the Aussie is, well, yellow is still considered neutral or flat, but now the US dollar is getting stronger, so I would expect my pound US trade to do a little bit better. And I don't know, the 4-hour MACD line is turned up, it's oversold, and we had the early reversal area here, the early reversal alert arrow here, and it's sitting right on the bottom. However, there's no real blue support zone here. It's actually a very, very thin line, so that's a super weak support. So the major support is down here, so I would give this trade the benefit of the doubt and stay in it, because it can push these double trend channel lines down, and at least I would hope for it to get into the blue area. So the pound US dollar is doing a little bit better because the US dollar is strengthening, the pound is weakening, and my greatest potential still is always the pound New Zealand, but it's going in the right direction. So although it's flat, the RSI is oversold and flat. Oh, there we get divergence trying to poke its head up. So pound New Zealand, this is an iffy trade. And let's look at my pound odd trade. It's trying to go down a little bit. It's oversold, but look at the 4-hour MACD is turned up. So it's going in the right direction. And the US tech, let's see, I wanted it to go up, so possibly now it'll start going up. It's coming off the bottom. At least this is not a retracement trade. This is trading off the bottom, buying off the bottom, which is for this reversal counter trend trade system using the red and blue zones. At least we're going in the right direction, and we're going with the trend slope channel, which is up. So let's look at the US 500. Well, I'm buying into resistance, so I don't know what the potential would be, so I have to really keep my eye. So I'll really have to keep my eye on this particular trade. Buying off the bottom, but when resistance is so close, I don't know, it doesn't have a lot of room for potential. So in real life I would have not placed this trade, but here's my target for the triangle breakout, and back in here with the pop-up alerts, you do get extra pop-up alerts with this system. So when there's a triangle breakout, the dashed green line is the upper resistance and the dashed red line is the bottom support, and if price breaks above or below, you'll get a pop-up alert that says UTL, which means upper trend line break, and it'll give you the currency pair so you can go look at it. If it's a breakdown below the dashed red support line, it'll say lower trend line. Well, the initials are LTL, so it would be lower trend line. Here we go, LTL break. It tells you the pair or the indice, in this case is GT 100. Here was the LTL lower trend line break on the US 30. Here's the LTL lower trend line break on the pound yen. So that's LTL break is the upper trend line or the lower trend line for the triangle breakout, and it gives you a pop-up alert and it gives you a target. So in this case, the solid green line is your triangle breakout target, and the solid red line is your triangle breakout target for a sell trade. So I want to go back and just say that with the new indicator, I started to tell you this in the beginning, but with the new indicators, which are the triangle breakout, you do get a pop-up alert, and I just explained what the message is here on the pop-up alert. And then the early reversal candle is a very interesting indicator, and this aqua candle here is your early reversal pop-up alert. So whenever the price spikes on a candle and pushes into a support or a resistance area, with usually it's a spike of a long tail, here you can see an early reversal sell alert arrow, and it popped up because this bullish candle had a long tail, a long spike. When that happens, the early reversal alert arrow will pop up and warn you that it's hit a high and to expect a reversal, and it usually comes a couple of candles later. In this case, the sell entry arrow appeared 2 bars later, and also you can't see it, but the SAR dot, which is hot pink, is right here. So this was a perfect sell coming out of the red overbought zone, and everything was a perfect sell trade. A counter trend trade is a rejection of price in this red zone and selling off of the double trend channel. So even though the double trend channel lines are up, this is a perfect counter trend trade. At this point, the currency strength meter would not be reflecting values in the way that it would if this was just a normal trend trade, because at this point what we're doing with this trading system is selling off of extreme highs and buying off of extreme lows according to the double channel and the red zone and the blue zone. So this was a perfect sell entry. Once price pushed past the golden mean line, this trade turned into a trend trade. So when you enter at an extreme of overbought or oversold, you're actually trading against the trend, because you can see that this was the buy area off of the demand area. Price was in demand, and it's not necessarily the traders that push this price up, it's the market makers, and then the traders jump in behind them, and that's what gives this extra long candle. So here's where the market makers reversed the trend and they started buying, and once normal traders recognized that and saw this, they jumped right in and pushed price up on a candle, very long candle. So once price pushes past this golden mean line, it becomes a trend trade. Now we're trading with the trend of the double channels, and then it goes into consolidation, but it keeps pushing up. Once it spikes here into the overbought zone, the market makers reject the price and push it down, because they expect a lot of traders to still be in long trades, and their goal is to stop them out. Using this system, we can see with this system when the market makers push price to an extreme and then they reverse it. So they're reversing, and at the same time we need to reverse. And I've tightened up the SAR dots, the candles, everything is tighter. Even the MACD, the multi-time frame, I tightened up the indicators so they react quicker and they're not quite so lagging as in the basic, advanced, and extra advanced system. But the extra advanced alert system, I've tightened those indicators so they're reacting quicker. Now we have a 30-minute Forex Factory calendar alert. So it's 8:30 a.m. Central Time, my time. So that means right now it's actually 9:30 a.m. That's in Eastern Time when the U.S. stock market opens. So now I had placed these early trades for the U.S. Tech and the U.S. 500. And let's see, we're in the U.S. 500. And this is the one where I said it doesn't have any room to move up. So right now, when the U.S. stock market is opening, it looks like price wants to get rejected. So that's the danger of trying to trade when there's no space between the blue and the red zones. So now my trade is reversing. It's really not doing well at all. But you know, I predicted that because I showed you why that was a bad trade. So here's the US Tech, my other buy trade. It had a little bit more room for movement, but not much, and it's getting the rejection arrow. The price is being rejected. So now in real life, what I would do is I would manually close the US 500 trade and the US Tech, and I would reverse. However, that's a little difficult to do because we don't want to be selling into the blue zone. So this is a trading day where I don't want to sell at the bottom, but I don't want to buy at the top, and I already pretty much bought close to the top, and now price is being rejected. Oh, while I'm talking, the US 500 trade got stopped out. So I don't necessarily want to be selling at the bottom, although this is considered minor support, but selling at the bottom of the trend channel, that's a little bit iffy. You can see that the purple baseline is still in between. Everything is turned down. But I think for this kind of situation, I would like to see a sell trade mature where these double support lines are pushed down to maybe support 1, support 2, support 3. Right now, jumping in and selling, it's a possibility because this blue support zone is a very small support zone. It's just for going back a couple of hours. It's not a major support zone. This is definitely what you would call a super minor support line. This is a little bit more of a major support line, and this is where the real major support line is, and price probably could be pushed down at least to here, if not to here later on. But at this point in time, I don't like to gamble. I don't like to sell at the bottom, just like I don't like to buy at the top. And because the purple baseline is in between, it means that there's no real trend. And especially meaning in the higher time frames, there's no real trend. Now, if the RSI pushes below the 50%, it's possible that I could sell, because only because this is such a minor support. I would have my target be this medium support here between the Fibonacci support 1 and Fibonacci support 2. So I hope that makes sense to you. So let's take a look at my pound trades. Look at the pound. The US stock market opened 4 minutes ago, and look at how the pound is strengthened. It's no longer blue, it's yellow, which is neutral. And we still have a stronger US dollar, so the pound US dollar is still going down, and the New Zealand dollar is still strong, but it's not as strong, anywhere near as strong as it used to be. So if you're in some of these currency trades before the US stock market opens at 9:30 a.m. Eastern, you really need to look at your charts and very possibly manually close your position. And especially because we have a US dollar news event coming in now at this point in 20-25 minutes. So you don't really want to be any open trades that have the US dollar as a cross pair or a base pair. I'm in a pound US dollar trade, which could really reverse on me when the news hits. And here we are in some kind of consolidation. It's created a very tiny little support here after the early reversal arrow, and now we have a green SAR dot, and it's broken above the triangle breakout, and here's the triangle breakout target. So it could be that because I got in this trade so late, and basically I was selling at the bottom of the trend channel line, but I was working with the currency strength meter at the time. So this is not a good trade, and when news hits, it could go in my favor or not in my favor. I don't know, but that's what we call gambling. However, here's support 3 down here. Even though price is sitting right in the middle of these double channel buy lines, if you look at the red resistance and the blue support, price is right in the middle. So price is actually right now totally trendless, and at this point we're just waiting for the consumer confidence USD news event to come out, and then price will go up or go down. So if I had been really trading for real, I would have known that at 9 a.m. my time we're having a red US news event. I would not have entered into this trade with the pound US dollar, because the US dollar is the cross pair, and I don't want to be in any trade before a news event, especially if I'm selling at the bottom, because that's kind of gambling. So now I'm getting the white X. Price doesn't know what to do with itself. If it keeps going down, that'll be okay. But if it goes in the wrong direction when the news event hits, by the time it hits this green triangle breakout target, I'm going to close my trade because I don't want it to hit my stop loss. So this gives me an early place to close my trade manually if it goes against me because of this red news event coming up. Right now it looks like price is going in the right direction, so I'll just leave it alone. But when the red news events hits, if the trade manager has not already booked half of my trade and moved this stop loss down to break even, then I'll definitely exit my trade if it goes against me. Okay, even though my US 500 trade got stopped out, my US tech trade is still in the game. So we have the reversal arrow, and I'm in a tiny little bit of a loss. So the US dollar is very strong, which means that this being a US tech index, if the US dollar is strong in the currency strength meter, then the push to the upside is stronger than the push to the downside. But we've got the reversal arrow, and of course we're in this very narrow little area between the red overbought and the blue oversold. So this is kind of a no man's land. There we go. Now we have the entry arrow on top of the early reversal area, so we're going to see my US tech trade go down. And US tech index is actually the US NASDAQ index. It's all the techie stocks. So my pound US dollar trade is doing well, but again, it might not do well when the US news hits. But if my trade manager has managed to move the stop to break even when the news hits, then I'll be very happy about that trade. The pound New Zealand dollar, the New Zealand is still stronger than the pound, but where this used to be, where the New Zealand dollar was a very strong orange and turning red, which is extremely strong, it's just not the same ratio as before. I'm still going in the right direction for the pound New Zealand dollar, but the momentum has dropped off, and now you can see the RSI has turned green and has hit the 30%, and we have a green SAR dot. So if the 4-hour MACD turns above the purple baseline, I would manually exit this trade because I'm not going in the right direction. It looks like trend wants to reverse on me, but because the ratio is still fairly okay, as long as the pound stays weak and as long as the New Zealand dollar is stronger, but of course I wanted to get much stronger, at least into the orange, then I would consider staying in the trade because it might have a future impact. The pound dollar continues to push down, which is good for me. It's now sitting on support too, and as long as this keeps pushing down, then the early reversal alert arrow will keep pushing down with it until finally price stops pushing down, and that would be on the next candle. The early reversal alert would not follow to the next candle if price actually does reverse. But if price keeps pushing down on the second candle, you'll see the early reversal alert be on until it stops pushing. I hope that makes sense. So the early reversal alert, as long as the momentum is very, very strong, it will move with that particular candle until momentum drops off. You can see the momentum in the RSI window. The line is turned down below 30 and it's orange. You have the 4-hour and the daily MACD lines turned down below. They're both below the purple baseline, so I would leave this trade alone, and the only danger is the US news coming up now in 15 minutes, and so I have to really, this is a trade that I would want to watch because it could really hit support down here, and if my trade manager hasn't caught it, I could manually close it to book some pips right before the US news event hits. So that's a consideration. So trading always is a lot of consideration. There's no trading system in the world that can give you absolutely perfect alerts because we always have things happening like the red news events that can completely change trend and get you stopped out. But at least with these red overbought zones and the blue oversold zones, you would know if you're selling at the bottom or buying at the top, which is what we try not to do. unless at the time the currency strength meter is aligned with the values being very favorable. And you can see that this is a major support area. So once price pushes down into here, if it does, then that's an area where the trade manager will be handling the trade, or I could manually close the trade if I decide to. Although with the triangle pattern that was formed, this is the triangle breakout target down here, which is way below my take profit. So I could double click this take profit and drag it down here if I wanted to. There's always that option. So in the next video, I'm going to talk about how to use the currency strength meter for fading the trend. Fading the trend is a completely different way to use the currency strength meter, because up until this counter trend reversal system, we've always used the currency strength meter as a trend trading or a trend following tool. The values it gives us with the strength and the weaknesses, we've always bought the strength and sold the weakness. But when you're trading counter trend like this pro system is, in the beginning, when price bounces off the oversold area, you're going to be trading against the currency strength meter. You're going to be trading exactly the opposite of what the currency strength meter really is telling you to do, because the currency strength meter really is primarily a trend trading or a trend following tool. But with this pro system, we're going to use it as a fade the trend tool, which is using it in exactly the opposite way. So the next video, I'm going to continue this video into a separate video where I talk only about how to use the currency strength meter to fade the trend, which is doing the counter reversal trades. And that's what we use these supply and demand zones for. So I'm going to explain how to use the currency strength meter to counter trend trade in the next video, and hopefully it'll be a shorter video. So thanks so much for taking the time to watch, and I'll see you in the next video.